Almost a century ago, Henry Ford declared, "It is well enough that the people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." Even though many years have passed since he said this, Ford's notion remains as relevant now as it was in the 1930s. This does not imply that banking is necessarily bad. Banks provide critical services that keep our money safe and secure. Few people would choose to store their money under a mattress or bury it in the yard. However, banks frequently generate large profits, sometimes taking advantage of people who are unaware of their activities. Welcome to Cashflow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. Because banking and finance can be complex and obscure, many of their acts are hidden from the general public. Regardless matter how you see it, we are all connected in this system, whether we are borrowing, spending, or saving. Banks discover many ways to profit from your money. Unfortunately, most individuals are not aware of how badly they are being exploited. This profit-driven mentality is why investors choose to buy bank equities. Here are 7 facts about money that banks may not want you to know. Number 1. Every time you use your credit or debit card to make a purchase, banks make money. Banks profit from processing fees. Although you may not perceive it, the store covers these additional costs. To defray these costs, shop owners frequently include them in the rates you pay. For example, if you purchase $500 with your card and the retailer charges 3%, they will pay $15 to the bank. Banks gain this money simply by offering payment processing services. Number 2, banks profit handsomely from your credit card transactions. There is a reason why banks provide various incentives to persuade you to apply for a credit card. What you may not realize is that your credit card's interest rates might be raised at any point. According to the Federal Reserve, the average interest rate in February 2024 is around 22%, but banks can boost it to 23% or 24% with a 15 to 30-day notice. People frequently ignore these notices because they contain sophisticated legal jargon. Banks benefit from your lack of awareness. If you do not settle your credit card debt in a timely manner, compound interest will accumulate and have a big impact on your finances. Number 3, you lose money each year. Despite the popular idea that banks are the safest places to deposit your money, the truth is that inflation devalues your money over time. While you may believe that your money is safe and growing due to interest in a bank account, the reality is quite different. Most bank accounts don't keep up with inflation. In the United States, inflation typically hovers around 3%. If your bank account only earns 0.5%, you essentially lose 2.5% of your money's worth each year. This is not about your investments, but rather the money sitting in your savings or checking account. Number 4, always keep an eye on your accounts. Your bank account is critical, so make it a practice to check it frequently. Unauthorized charges can show on your statement without your awareness. If you discover any such charges, immediately notify your bank. By law, if reported within 90 days, the bank must return your money to your account within 48 hours, regardless of any delays they may undertake. Number 5, the money in your bank is not physical. Although you may have substantial funds in the bank, they exist only as numbers and computer records. Banks use your money for a variety of purposes, including lending it for business loans, auto loans, and mortgages. During the 2008 financial crisis, banks struggled to accommodate withdrawal requests. While your savings are insured and government-backed, holding money in the bank is not the same as keeping cash in a box. Your money generates profits for the bank, not you. Number 6, banks actively monitor all of your financial transactions. By law, they must disclose any questionable behavior to the IRS. Transactions that surpass $10,000, whether deposits or withdrawals, are automatically identified and reported. If your account is audited, the IRS examines these transactions to see whether taxes were correctly paid and the transactions were handled lawfully. Being aware of this omission can help you keep a clean record and avoid legal complications. Number 7, overdraft fees can add up quickly. Overdraft protection may be convenient, but it can also be costly. Banks frequently charge large costs for each overdraft event, sometimes up to $35 or more per transaction. These costs can easily accumulate, particularly if you are ignorant of your account balance or pending transactions. To avoid these costs, consider turning off overdraft protection or periodically checking your account balance to ensure you have enough funds. Be wary of hidden account fees. Banks may charge various fees for services such as ATM use, printed statements, and account maintenance. While these costs may appear insignificant individually, they can add up over time, depleting your funds. Review your account agreement carefully and choose fee-free options whenever possible. Consider transferring to a bank or credit union that offers more clear charge structures and reduced rates for basic financial services. As we conclude, I'd like to thank you for watching. I hope you found value in this video and learned something new, and I look forward to seeing you in our future videos. I would deeply value it if you could like this video and subscribe to our channel. Your support will help us to create more valuable content, and we can work together to secure your financial future. What are the key takeaways from this video that you can share in the comment section?